6 months ago, gold hit record highs, but many analysts believe the biggest move is yet to come. Behind the scenes, governments are printing money like never before, central banks are buying enormous amounts of gold, and global debt is continuing to climb to levels never seen before. So is gold about to enter another major bull market, or has the opportunity already passed? Today, we're breaking down the 5 biggest reasons many investors believe gold could continue rising, and the risks that could prove them wrong. Section 1. Why gold matters. Before we look ahead, let's quickly understand why gold has survived for thousands of years. Unlike paper money, gold can't simply be created by governments. It has a limited supply, it's durable, and it's recognized almost everywhere in the world. Throughout history, investors have often turned to gold during periods of uncertainty. When confidence in financial markets falls, gold tends to become more attractive. That's why it's often called a safe haven asset. But today's story isn't just about fear. It's about supply, demand, and economics. Section 2. Central banks are buying gold. One of the biggest reasons analysts remain optimistic is something that most people have never heard about before. Central banks. Countries around the world hold reserves to support their financial systems in central banks. These reserves usually include foreign currencies, government bonds, and gold. In recent years, many central banks have dramatically increased their gold purchases. Why? There are several reasons. Some want to reduce their dependence on the US dollar. Others want to diversify their reserves, and some simply view gold as a reliable long-term store of value. When central banks buy gold, they usually aren't trading for short-term profits. They're often buying for decades. That creates steady demand. And when demand rises while supply stays relatively stable, prices often move higher. Section 3, global debt is exploding. Governments borrow money to pay for things like healthcare, infrastructure, education, and defense. Over time, that borrowing has continued to grow, with many countries now owing trillions of dollars. As debt rises, governments face increasingly difficult choices. They can reduce spending, raise taxes, borrow even more, or allow inflation to gradually reduce the real value of their debt. None of these options are easy, and each comes with economic trade-offs. Throughout history, periods of high government debt have often increased interest in hard assets like gold. That's because many investors become concerned about the long-term purchasing power of paper currencies. Gold won't solve the debt problem, but many investors believe it can help preserve purchasing power if inflation remains higher than expected. Section 4, inflation is still a risk. During the past few years, inflation reached levels that many people hadn't experienced before. Food became more expensive, fuel prices increased, housing costs rose. Although inflation has slowed in many countries, it hasn't completely disappeared. If inflation remains above central bank targets, investors may continue looking for assets that can preserve purchasing power. Gold has historically performed well during some inflationary periods, but it's important to remember that the relationship isn't perfect. There have also been times when inflation was high and gold struggled. That's why gold shouldn't be viewed as a guaranteed hedge. Instead, many investors use it as one part of a diversified portfolio. Section 5. Gold supply isn't growing quickly. We all know that finding gold isn't easy. Mining companies spend years exploring before discovering economically viable deposits. Even after a discovery, it can take years to receive permits, build infrastructure, and begin production. Many existing gold mines are also producing less gold than they did in the past. At the same time, mining costs continue rising. Fuel, labor, equipment, and energy all increase production costs. If supply grows slowly while demand continues rising, basic economics suggests prices could benefit over the long term. Section 6, geopolitical uncertainty. And the stock market doesn't like uncertainty. Wars, trade disputes, political instability, and banking stress. These events often increase demand for defensive assets. Gold has historically benefited during many periods of global uncertainty. Investors don't necessarily buy gold because they expect disaster. They buy it because they want insurance. Just like you insure your house, even though you hope nothing happens. Some investors hold gold for the same reason, not because they expect markets to collapse, but because they recognize uncertainty will always exist. Of course, every investment has risks. Gold is no exception. If inflation continues falling and interest rates remain high, investors may prefer interest-earning assets instead, like bonds. A stronger US dollar has also historically placed pressure on gold prices. Economic growth could also reduce demand for safe haven assets, because if investors become more optimistic about stocks, money could flow away from gold. Some investors choose to buy physical gold, others invest in gold mining companies. Mining stocks can sometimes outperform gold itself because rising gold prices often increase miners' profits, but they also carry additional risks. Mining companies face operational problems, higher production costs, political risks, management decisions, and environmental challenges. So, while miners may offer higher potential returns, they also tend to experience larger price swings. So, is gold guaranteed to boom? No investment comes with guarantees, but there are several reasons why many analysts remain optimistic. Central banks continue buying, global debt remains historically high, gold supply is growing slowly, inflation hasn't completely disappeared, and geopolitical uncertainty continues across many parts of the world. Whether gold continues reaching new highs will depend on how these factors develop over the coming years. For some investors, gold may serve as a way to diversify a portfolio. For others, it may simply be a fascinating market to follow. Either way, understanding why gold moves is far more important than simply watching its price. Do you think gold is heading much higher over the next decade, or has it already reached its peak? Let me know in the comments. If you enjoyed this breakdown and want more videos explaining investing, business, and the global economy in a simple way, consider subscribing. It's free and you can always change your mind. Thanks for watching, and I'll see you in the next one.